But we want to bring in our next market guest to discuss much more on the broader markets. We have Rob Haworth, U.S. Bank Wealth Management Senior Investment Strategist, here with us now. Rob, it's great to have you on. And I first want to get your take on today's market action. We're seeing stocks sell off, especially those growth and technology names. The NASDAQ, the massive laggard here, down 2.7%. What do you think is the main catalyst here?
Yeah, we've seen really quite strong earnings and earnings surprises as we look at first quarter earnings. And so I think to some extent the market is now taking a bit of a pause, thinking that some of the best news may be behind us at this point on stocks, including the growth stocks, especially as we start to look to more reopening, as we've seen the news coming out of New York that they're going to reduce the coronavirus restrictions, go back to 24/7 transit activity. So I think it's kind of twofold, right? One, a great earnings season that people wonder if can be repeated, and two, looking more to that reopening story.
Yeah, I mean, the catalysts here aren't necessarily as cushy as what we had before earlier in the year when we had jitters coming through and kind of the reaction to that next wave of stimulus that passed. But here, if you think about support at these levels, what are you watching for, given the kind of the intensity of today's sell-off, the VIX now spiking back above 20? I mean, how do you see this playing out in the next couple of weeks? Because it does seem like we're going into another wave of volatility here.
Right. I think the key is going to be the economic data. We've had very good numbers come out of the purchasing manager surveys. Getting into the jobs report, I think we'll need to see the evidence that people are employed and that employment is growing, and that can provide consumer confidence. And that's what it's going to take, I think, for any next wave of economic activity, a resurgence of economic activity, to provide another wave of earnings growth for these stocks in the year end.
And, you know, one of the other things we've been hearing some strategists talk about is now the focus is really shifting away from these fundamentals. It's going to be more on Fed policy and on fiscal policy when it comes to those potential tax changes. Do you see the stock market just turning into year end, or do you see further significant upside considering what we have next to look forward to?
We do remain constructive on the market. We kind of remain overweight, and our targets would be substantially higher here, partly because we think earnings growth can continue along with this economic growth. I think you're absolutely right. Key factors remain: how long does the Fed remain on hold? When do they begin talking about tapering their quantitative easing measures? June will be an important meeting for that. And then two, I think the question is, what does the next leg of fiscal stimulus look like? How big are the bills going to be? We've seen President Biden's proposals at this point, and we know the Republican Senate proposals have been somewhat more modest. So we'll have to see where we end up. The fiscal part of the equation seems a little further off. We still have that Fed meeting coming up in June, which can provide us more of an indication as to how long they'll remain silent on tapering quantitative easing.
Yeah, Rob, I know we've heard that update from the Fed many times. They're not even thinking about raising rates, but it looks like maybe Treasury Secretary Janet Yellen may have jumped the gun a bit, putting pressure on that front. When we look at the updates we got from her today, speaking maybe off cuff, maybe it wasn't necessarily planned to indicate plans at the Fed, but sounds like potentially going to be a tough spot for Jay Powell to maybe navigate this, especially if the sell-off today accelerates. So, I mean, when we hear her talking about maybe interest rates needing to rise somewhat to protect against overheating, what do you think that does to maybe those tensions that were already there about maybe a quicker than expected increase to rates or maybe even tapering?
Yeah. What's interesting to me about today is the 10-year Treasury yield isn't really rising at this point. We're still somewhat lower on the day. So the market isn't really pricing in that longer-term growth story. But I think we are seeing rate increase expectations coming in on the short end into 2022. We'll have to see how that pressure works with the Fed, or if they stay with their story, which is they're going to wait for inflation to remain above their target for some time. And as we saw from the personal consumption expenditure deflator data last week, we're not yet at their target. So there's still more time and more data for them to evaluate between now and their next meeting.
And Rob, one of those data points will be this Friday's jobs report, and consensus economists are looking for non-farm payroll gains of nearly 1 million. Of course, Fed Chair Powell has talked about wanting to see a string of months of 1 million plus jobs coming back. What are you expecting from this Friday's report?
We don't really maintain a forecast on this Friday's report, but I would say we need to see those job gains continue. We have, if we look all the way back to the job opening survey, we still have 7 million job openings, and the data we're seeing from purchasing manager surveys is that jobs are hard to fill. So we need to see significant increases in payrolls of this size for a number of months to catch up to where we were pre-coronavirus, and then to absorb population growth in the meantime. So we're looking for this to continue, and especially as we get through reopening, it should continue. We should see further job gains for this economy, and to kind of continue this strong growth story.
All right. Well, we'll definitely see you on Friday. And thank you so much, Rob Haworth, U.S. Bank Wealth Management Senior Investment Strategist. Also, stay tuned to Yahoo Finance this Friday at 8:30 a.m. Eastern. We'll have live special coverage of that April jobs report, so definitely keep it here on that date.